Bitcoin is in a pickle, and today is our weekly close. In today's video, we're going to be looking for clues across the higher timeframes for what is most likely to occur next for Bitcoin. Welcome to Bitcoin Escape Plan. If you enjoyed the analysis, then leave a thumbs up and subscribe to the channel. And if you want a personal reminder of the levels that matter most every day in your email, then go subscribe at bitcoinescapeplan.com. All right, let's get into the video, guys. So first and foremost, didn't make a video yesterday. I think I'm going to not make videos on Saturdays anymore, guys, because it's very commonly our lowest amount of volume on a Saturday. Very little happens. If there's something important to talk about, I will talk about it in the 4-hour break room. That is my private membership. You can get more information about that in the description. But I actually didn't have an update for the group until this morning. Right before we had this 4-hour SMA retest, I did give my opinion about how I think the price is going to behave. So far, it looks like it is sticking to that plan. Broadly speaking, I would expect we're going to trend towards 63.5K. There's a couple reasons that are going to put pressure on that we're going to go over later on in the video. So I will touch on the 4-hour time frame at the very end, again, sponsored by the membership. Let's get our daily close. Our daily close yesterday was about 63K. So like I said, very little volume, pretty common for Saturday and Sunday, very little bottom. However, we do sometimes see a significant price move off of that little bit of volume, like this guy right here. This is a Saturday, but that's a lot of volume for the price. Not a lot of volume in terms of how many people are actually in, but in terms of the body of the candle, that's a pretty significant move. I mean, it only looks like 1.4%, but that's plenty. You can, especially with trading leverage contracts, that's plenty. If you can catch a 1.4% candle, it's going to be a happy day for you. So broadly speaking, what do we have to keep in mind where we are right now on the daily chart? So we're kind of in this pickle again, where it would be easy to assess that we are in a slight uptrend. That uptrend is continuing to get pushed lower. However, broadly speaking, we're in a downtrend. I don't really have any reason to believe otherwise. That's a pretty clear downtrend, my friends. There's nothing really that is making me believe that's going to flip. I think one of the primary things that we're going to have to pay attention to on the daily time frame is this is something I've pointed out now in several videos. We are starting to see this crossover happen between the daily SMA and the bottom band of the downtrend anchored VWAP. If you have no clue what I just said, go over here to courses. I explain that tool in more detail there. This is something I've been talking about for probably a week, maybe 2 weeks now. The closest corollary that we have to this is over here in March, April. So same overall trend where the price has a massive drop to the downside that initially disconnects us from the bottom band of the downtrend anchor VWAP and the daily SMA itself. Price then fights to reclaim one or both of them until such a time that we have another crossover event, which initially should be bullish. It brings the price higher. What happens, however, the average moves down below the bottom band once again. And in this particular instance, it did recover to the upside. So what would allow for that for us, I think, is the results of the Wednesday meeting with the White House about crypto. So brief reminder, that Friday meeting that was supposed to happen with the SEC and CFTC did not occur. That's not bullish. And it's still September 15th is the earliest that we're going to get a vote from the Senate. And I'm still not sure if that is like the actual vote or if it's just a vote to see if there's a vote. This is a Bitcoin channel. I'm not a legislator. So broadly speaking, that is the shape that we're looking to pay attention to on the daily time frame, separate from the fact that we do have expansion on the Bollinger Bands that are definitely favoring the downside. You can see it's like basically flat on the upside, not really indicating that we would expect to move higher than about 65.2K in terms of the daily bands themselves, whereas the daily bands are continuing to drop lower. A couple days ago it was 62.6 and now it's 62.4, which is notably below that 62.5K Fibonacci pivot that we've talked about multiple times. I am not convinced personally that is the only tag we're going to get of 62.5K. That's really what I'm going to be looking for specifically around the daily close today, daily/weekly close. Structurally speaking, to me, on the weekly time frame, it does look like we will have persistent weakness if we close below 63.5. And at the moment today, we are struggling to even sustain above 63.3. So not necessarily 63.3 being a 4-hour pivot, 63.5 being a daily pivot. And interestingly enough, this I think has changed again since the other day that I talked about it. I believe this was 64 the other day. Now it is 63.5. This is the point of control, guys. I'm actually going to go over to the monthly time frame for this because it's a little bit easier to see. This is the point of control. So this is the point on the chart where the most human beings have pressed buy or sell. So it was 67.4 for a while. It still is on the 4-hour time frame. It's not that anywhere else. And then it switched to 66.9K for a while. And anyone who's been subscribed long enough, you know, we saw 2 rejections at 66.9K. That's been a big part of why we've seen this downside progression in what is otherwise an uptrend at the moment. So broadly speaking, what do we anticipate to continue to happen for this year? Well, subscribers are already aware, in a bear market year, we typically expect to see between 3 and 4 green candles. We have printed 3 green candles already, which means we are likely to see between 0 and 1 more green candles this year. At the moment, we are about to print that 4th green candle. Now, I'm still hesitant about this. I think it really depends, again, on what the White House decides on Wednesday and whether that is stoking more excitement in anticipation of the September 15th vote, or whether it makes excitement around the September 15th vote basically non-existent, like not important. It makes it irrelevant. I don't know what is on their agenda to talk about. I just will be paying attention to the key levels at that time because probably going to see some volatility. I would imagine between Tuesday and Thursday next week are probably going to be pretty volatile, depending again on where we close today. So broadly speaking, on the month, we have our close last month of about 62.8K, meaning anything for us to confirm what we would anticipate being a bearish candle, a close would need to be below 62.8K in order to fulfill that. Originally, we had been talking about the possibility of the 2018 fractal continuing, meaning that we would expect downside pressure into the first 2 weeks of August. That has not really been the case. Prices actually held up pretty well during that time. And now we just kind of have to, again, we're in a pickle. Either we're going to make another test for 62.5 or that test that we already had at 62.5, or both tests, actually. I've talked about 2 of them in the membership. That I think could be enough for us to mount a move higher. How much higher is that target? Well, what I'm hearing from most other channels is people are anticipating a move towards 73K. Subscribers are already well aware. That's what I talked about from June into July. That did not happen. It is possible that we're seeing an inverse relationship there where we get a higher low later and a lower high earlier. This is possible. We don't really see a lot of evidence for that in bear market years, or you kind of have to cherry pick them. Like this is a double top. This is obviously lower. This is a higher low, but typically speaking, we don't get like this isn't over here. You know what I mean? Like typically speaking, we don't start to get higher highs until we're on the other side of the trend. It's more like this, where we drop down, we get a high, we drop down, we get a lower high, we drop down, we get a lower high, we drop down, we drop down. So I wouldn't, like, it would be breaking trend if we were to see this move to 73, and it would be breaking trend sufficient enough that we would anticipate it would actually continue to go up at that time. I'm still seeing a lot of people say that the bottom is in. Like they're saying it very confident that the bottom is in. Combined with, I also see a lot of content creators talking about the October 5th to October 20th window being where it would be most likely, based on the math, that we see the Bitcoin bottom being 365 days from the other top is typically when we see that. I do personally believe that that will coincide specifically with weakness in the S&P 500. Whenever we start to see significant weakness for the S&P 500, Bitcoin will react negatively to that. Depending on where the price is at that time, it will react very negatively to that. So me personally, I'm not someone, I don't think that the bottom is in. I understand why people want to believe that, because it reduces the time delay between the outcome that you want and the reality that is. But for me, I'm really thinking about the levels that we're at, for me, are defined by three distinct cohorts of individuals. They are defined by the top buyers in 2021. Now, these people do not represent the largest amount of volume, but they are an important subset because they're either gone, they're either no longer invested in crypto at all, and they are actively telling their friends not to buy it, or they realized their mistake initially and they learned from it and they bought through the lower parts of the other markets. They may have even bought in here. These people have high conviction or no conviction at all, and they do represent an important subset of the overall buyer sentiment. We have the second cohort of individuals, which is the ETF buyers. Now, obviously, the earliest ones, those people are probably not going to be in loss for more than like days or possibly hours, you know. Like somebody who bought and their cost basis is over here at 23K, like there are very few, there's a short amount of time where those people are in loss. So this is going to be the same for anybody who re-upped in the middle of the ETF bubble, say around like 50K being their cost basis. Those people, I wouldn't really anticipate them to be in loss for more than a period of a few weeks, or in this instance, possibly months, which for me would be if we have our relative bottom in October, we may still chop around until like January or February, essentially. And specifically the 2018 into 2019 correlation, that is what we saw. It was a short period of time. It was a pretty sharp uptrend. I think this is what most people are anticipating. They're just anticipating it happening now. I don't really follow that, because the only reason that this was able to happen is because of this guy, is because of how sharp the November candle was. So again, a sharp recovery up above key levels is going to be predicated upon a sharp initial drop of those levels. So we have seen volatility this cycle, but it has been more spread out and earlier than we would typically see it. We broke the monthly SMA way earlier than we would normally see it. Typically speaking, it's about 7 to 13 months that we are disconnected from it. We are on month number 9. So we are running out of time before the price needs to make a move higher. However, I still think that there's no reason why that can't be December or January. And some of the laws around the stablecoin stuff, I believe, speaks to January being more likely that we start to see major inflows, as well as just like banks have like Christmas incentives. You know what I mean? They're trying to get whatever they're done, whatever they want to get done by that time, so that they can move on to the next thing for the new year. Like a lot of this is just business combined with human beings. So that's the second group of individuals. Guys, I know I got distracted, but I got back to it. The primarily ETF buyers. These are people who have lower conviction for Bitcoin. They just want exposure to the price performance. They have somebody in a suit who's buying it for them, probably in IBIT shares in a 401k or IRA. They are not concerned about it. They are either going to have a conversation with their investment advisor, and the investment advisor is going to say, well, I might have been wrong about this Bitcoin thing, or do you want to buy more, or are you comfortable taking a loss, or we need to do some rebalancing. Like that cohort of individuals does not have a strong bias, and that is the largest cohort of individuals, guys. That is the largest amount of people. So I do think, I mean, this is old news at this point, but the cold card hacks and just the nature of how much money came into the ETFs during that week that crypto saw $130 million hacked from high conviction crypto holders. I think that that is kind of a signaling that the market has changed, that we are getting into lower conviction does not necessarily mean less volatility, but I think it means it's more predictable personally, because people are going to do what they're told instead of actually making their own decisions. When the bottom actually does come, which again, I really believe is going to be based off of weakness in the stock market, that's what's going to actually allow, like if we look at the 2018 correlation, oh dear God, what did I just do? If we look at the 2018 correlation, which you guys already know is not quite as useful as it was before, it really looked like it was fine. It was hovering basically around the midpoint all the way into October, and it's different for us. We've already had our disconnection from the monthly SMA. We've been disconnected from it for 9 months. So here was where we had our initial interaction, and that's what actually brought us lower. As well as I believe this is the second round of ETFs that got denied. The Winklevoss twins got denied, I think it was July 27th or something like that. And then I don't remember if it's Grayscale or somebody else, but a second round of ETFs got denied at that time. So that was the major news catalyst at that time that pulled us down. For us, that's going to be the results of the Clarity Act. The Clarity Act is either going to pass or it's not. If it does not, the price is not going to be happy about that. It's probably going to react fairly negatively, or at the very least, we're going to see a retest of the relative midpoint, which is basically where we are right now, to be honest. I mean, we can look at the local lows, for us, that being 57.7, but when I refer to the local midpoint, I'm talking about 63.1K, that being the halfway point of the 126.2K all-time high in October. So as you can see here, again, we're basically flat for this whole period of time. So we get our little rise in July that we end up then dropping down into for August. September gets one last little push higher, but cannot sustain that move and then continues down lower. And in this particular instance, that was September 4th in 2018 that we saw that high. I think it's going to be September 15th for us. I think that there's going to be something that pops up in the news that allows the sentiment to suddenly flip bullish. Something, maybe it's something to do with this White House meeting, maybe the SEC announces another meeting after it, whatever. There's going to be something that flips the sentiment temporarily bullish, sufficient that we can get a rise into the anticipation of the September 15th vote, as opposed to it being a nothing burger and people not really caring. So for us on the chart, let's go see what those levels are. That's going to confirm that, because I don't, guys, like when I talk about the news, it's just so I can kind of like have a basis of like, how are these people thinking? You know, this to me shows the emotional sentiment of the chart. People are buying or selling. Why are they doing that? What's going on in the news that's telling them that? And is it confirmed or denied by what the chart itself is telling us? So overwhelmingly, what happens in a bear market on the weekly time frame, guys? We have interactions with the weekly SMA that get rejected. That's what happens. We see periods of time where we consolidate below it, we rise above it, and then we break and continue to trend lower. This happens in every cycle. Even in 2014, we have an extended period of time above it. This is 2018. But every time we retest it and we consolidate below it until we have our final date with destiny and have the lower drop. This is why I refer to this as the Elder VWAP. It's just the same anchored VWAP tool. You can go over here underneath forecasting, go to volume based, click anchored VWAP, drop it on a candle of your choosing, change your life. You won't make any friends, but that's okay. The overwhelmingly how I use the Elder VWAP specifically is I throw it on the oldest candle from 2011, and that helps me predict where local bottoms are. I will be honest, guys, I also do that with a piece of paper and a calculator. I take whatever the actual top is, and then I try and take that with correlation to what the previous drops were, which I think, if memory serves, it's like 93% or something like that, 86%, and I want to say like 78% for the most recent one. So we would anticipate a total drop of less than 78%. I think when I was originally modeling it out, I was anticipating closer to 68%. Come on, do what I ask you to. Do not sticky keys me. There we go. Haven't had that in a while. Okay, I just want to measure this. Thank you so much. This is not an accurate measurement. What is 74? So yeah, closer to 68 puts us like almost identical to that top band of the bottom, or top band of the Elder VWAP rather, which is right at around 38.4K. So what have I said multiple times on this channel, guys? For me, the lowest that I can believe, listen to my language there, the lowest that I can believe the price of Bitcoin is going to go is about 34 to 39K. And again, that would probably be in October, November. It's not going to look like it's going to do that. It's going to be very clear between now and October that the bottom is in, that we're not going to go any lower. and then magically the stock market will actually show weakness. This is kind of a joke. It's kind of not a joke. I think it's probably going to be around the GTA 6 release, to be honest. Like, I think there's starting to be cracks in the stock market by that time. I'm sure that Rockstar will do very well the week that comes out, but I think that that's going to be a relative top signal. I have no logic or basis or reasoning for that at all. That's totally a tinfoil hat theory, but I do have some bias towards that. So I think it's going to be structural weakness again in the stock market that allows for us to break down past the midpoint and have whatever our absolute bottom is. For me, I don't really care if that's 44K instead of 34 to 39. The chart is telling me that the lowest is 34 to 39. We have a lot of support at 32 to 35, structurally speaking, on the chart. We don't quite have as much volume there, although I'm sure if I use an older version of this volume profile, I may get a more accurate picture of how much volume we have at those levels. But for me personally, 34 to 39K is the lowest I can believe. Anyone who tells you we're going to 25K, they don't know what they're talking about. Yeah, 44K is also, I think, pretty reasonable at this point. Like, a lot of people are aware of that. That, again, I think would be like the first stop if we actually have a real move lower. How are we going to anticipate that before it happens? So let's actually get into what we're anticipating on the weekly time frame first, and then we can kind of look at the signals that will confirm what's going to happen next. So again, this is our current weekly candle. So we opened at 64.8, just below 64.9. And as of the time of my recording this, we are at 63.1, and we have rejected 63.3. And while we have flipped the 4-hour Bollinger Band, or rather the 4-hour SMA, the price is kind of struggling to stay above it. Like, as I'm saying this, the price is going back to the 4-hour SMA, essentially. It's really having trouble staying above that. Now, we have plenty of time left in this particular candle. 2 more hours, 2.5 hours roughly in this particular candle. So plenty of time for the price to trend higher. But what does the weekly chart tell us? Well, first and foremost, anything below 64.9, that's bearish. Are we going to close above 64.9 between now and 5 p.m. PST today, guys? No, I don't think so. Very rare that we have that much volume on a Sunday, and there's nothing in the news that would make us believe that it's bullish. Everything in the news is bearish. The only possible bullishness is the White House is having a meeting on Wednesday. That could get canceled. That could get pushed back. That could lead to absolutely nothing. I'm not going to treat that as bullish news. Same thing with the September 15th vote with the Senate. All that means is that they're going to talk about it. They could still have the exact same conversation that they've had previously, which is that the Democrats are not ready to vote on it, therefore not getting passed. So for me, no bullish news. I don't see it. The only thing that you can point to, I guess, is the ETF flows, and I don't think that that's relevant because BlackRock is directly incentivized to continue selling that product forever. So they're going to sell it forever, period. Like, on a long headwind, that is a positive thing. The short term during a bear market year, in the final stages of a bear market year, to me, guys, doesn't matter. It's just a blip on the radar. So what we're going to have this week, if we close below about 63.5K, is a triple rejection in terms of our most important signals on the chart. So I've talked about these many, many times. The point of control was different. This is what I was talking about earlier on in the video. The point of control was closer to 66.9K now. It is now down at 63.5K across timeframes. What does that mean? That means that more human beings have stepped up at that level to both buy and sell than at that 66.9K level. So long term, this is good for the price. I think that it's good for the price next year, though. I don't think that it's good for the price this year. Because what it does for the price this year is it makes a retest of 66.9K less important. It makes it less structurally important on the chart, and just as likely for it to be rejected as it is for it to be accepted. I think more difficult for it to be accepted, again, because the chart is no longer... I'm not the only one who uses this chart. People who are smarter than me, that have a lot more money than me, also use this free tool, I think that is going to necessarily pull the expectations of the price lower, which is what we've already seen. I've talked about this in so many videos this year, guys, where our relative lows are, we can get it almost to the day. You add a 0 to the 2018 chart, it's highly accurate for our relative lows. Our relative highs are significantly lower than they would have been in the 2018 cycle. And I would assume that that is going to persist. So again, we looked at it already. There are no instances of us seeing a higher low form after a lower high, or we really have to cherry pick, where there are some instances where it takes 2 months for the move to happen. So we would essentially have to accept that July is consolidation then, not a bullish candle. And I don't know if I agree with that. I mean, it definitely fulfilled the requirements of a bullish candle. Again, we do have instances where there are pair candles, where 2 candles in a row on the monthly time frame are green. We do not, however, have 2 pairs. This would be a novelty for us to see that for the first time, for there to be 2 pairs of green candles in a row on the monthly time frame. What would we anticipate after that, guys? The rest of the year would be bearish in that particular instance. So I am thinking that it's more likely that November is going to be the green candle, but if August is a green candle, I would not anticipate any more green candles for the rest of the year. Even if it really, really seems like it initially, I'm still not convinced that they're going to pass the Clarity Act. And if they don't pass the Clarity Act, the price is going to sell off really aggressively. It's going to head right back for the low point. I don't think it's going to break it at that time, but it's going to be ready to break it, and then weakness in the stock market is going to force the price lower. That's just my opinion. I don't have an exact date on that. I've been getting more messages about, where do I think the stock market's going to peak? I don't know. I sold all of my stock already so that I can focus on trading leveraged Bitcoin contracts. Like that's the truth, guys. That's what I've been exposed to this year. And I'm really glad that I did that. That has been the right choice for me. That's why I make a Bitcoin channel about it. If you want more information about how to trade my strategy on your own, you can watch the video at the very end of this video, the advanced Bitcoin trading course. But even as I'm talking about in the group membership, a lot of times those swings are not that obvious, guys. I'm going to come back to the higher time frame in a moment, but I do want to touch on this for the 4 hour. So when I gave my update earlier this morning, there was no reason for me to say anything all Saturday. And pretty much I said what I needed to say on Friday, where we had our initial tag of 62.5. And I thought that broadly speaking, we were going to head back towards 63.3 and would eventually have an interaction with the 4 hour SMA again. Now, I did not think that the 4 hour SMA was going to be as low as it was. I was anticipating closer to 63.4 at the time. And the price just continued to drag it down all day yesterday. So there was nothing to talk about. The only thing that we were anticipating was a 4 hour SMA retest, which again is what I said on Friday. You know what I mean? So some days it's going to be very boring, and technically speaking, this is still a decent trade. So this is the strategy that I teach, where you're looking for about a 1% swing. However, that's from the wick of the candle. That doesn't do you much good if you're in the middle of this candle. So the reality is, if you're catching it more based on the body of the candles, no, sticky keys, goes away. You've never been helpful once in my life, bro. Where's the measurement tool? Dear God. If we're measuring from the bottom of the candles roughly, it's a much, much smaller move. And me personally, I look for those on the 15-minute time frame, not the 4 hour time frame. I do not teach the 15-minute time frame. I may eventually make a higher tier membership tier for that, because that would be a full-time job, guys. It breaks on the 15-minute time frame all the time. It's not even useful for me to show that to you in a YouTube video, because it doesn't matter to you if you see this 8 hours later, what the 15-minute chart is doing right now. What you need to understand is, in that Bitcoin video that I told you about, Advanced Bitcoin Trading Course, the probability after a kissing candle is typically about a 1 to 3% mean reversion. So wherever the price is at, when it tags either the top or the bottom Bollinger Band, typically it's going to go about 1 to 3% in the opposite direction. Sometimes a lot more than that, depending again on the historical context and the structure of where we're at. So for me, I originally developed that strategy looking for scalps. I now would just focus on the swings. When I'm looking for the scalps, I do tend to focus more on the 15-minute time frame, and I'm really just adding or reducing the amount of contracts I have in my actual swing trade, as opposed to specifically taking separate futures contracts that have a completely separate bias. Basically what I said in the membership group was there was a scalp opportunity in the direction of 63.5. Now that's a pretty low move. I think it was right around 63 when I said that. So we're talking about, I guess that's not that terrible, 0.7. So pretty small move. You kind of need a decent amount of capital in order to have that be worthwhile for you. But like if you're someone who you're trading 3 to 5 grand or more as your position size, that's a decent trade. You know, that's still going to pay you whatever 230 to 320 bucks, something like that, which is decent. You know, again, not a terrible amount of risk, but a fairly obvious move. That's the type of thing I would be looking for in a scalp. And again, guys, that's why I look at one chart. I only look at one chart. So that was a long ramble, my apologies. Let's get back to the key signals on the weekly time frame specifically. Again, we're going to have a triple rejection this week if we close below 63.5. So this would not have been a triple rejection if the point of control didn't continue to get pulled lower. I saw this live on a video, guys, where it got pulled to 64K in the first place. We're already well below that. We were already going to get a bearish rejection if it closed below 64. So in one way, this is good for the price because there's a higher likelihood that the price can get above 63.5 before 5 p.m. PST today than there is for price to get to 64K. So there's a slightly higher chance that it can fulfill that requirement and therefore have a move towards 64K. However, if we close down here below it, what the price is going to want to confirm next is that same move to 63.5, but it's more likely that it's going to be resistance at that point. Separate, of course, from the fact that we are well below the 64K Fibonacci pivot and we are well below the bottom band of the downtrend anchor VWAP, both of which are going to put pressure on the price to want to test downside. The only thing for me that can possibly allow positive momentum, again, is going to be if the news from the Wednesday meeting with the White House is super favorable for the crypto companies in some way. I don't know if I believe that personally. And I do think that they're going to really want to make it seem uncertain until about 2 weeks before the September 15th vote. So that's still a lot of time, guys. That's still a lot of time for the price to go lower. And I'm not convinced that one tag of 62.5 is sufficient enough. We can't use the 2018 correlation really anymore. But I would still anticipate lower. I am still in my short to the downside. And structurally speaking, there's nothing telling me to get out of that at the moment. Technically speaking, yes, this is an uptrend, but it's an uptrend in a really large downtrend. Like I'm not someone who believes that the bottom is in. You can watch other channels that tell you that it is. I don't believe so. So what are some of these other levels? Again, I don't even know that I believe this, guys, but I'm seeing a lot of people talk about 73. So I feel like I've got to talk about it. You know, what would allow that is we would need to, I think, confirm 62.5K as support. So that would mean that we are not going to drop back there regardless of where we close this week. That means we close wherever we close this week and the price heads right up in the opposite direction going into next week, sufficient that we do not need a retest of 63 or 62.5. I don't know that I believe that, again, just based on the structure. Like, that's a downtrend. Even if that's a local uptrend, that is a local downtrend. So I don't know that I believe that personally. That's not what the weekly candle is telling me at the moment. Neither really is the daily candle. The daily candle at this point, we've spent several days disconnected from the daily SMA where we didn't even have wick touches of it. You know, so this is, again, as I talked about earlier in the video, this is where we would really anticipate by the end of today, maybe tomorrow, we're actually going to get our breakdown of the daily SMA below the bottom band of the downtrend anchor VWAP. And then again, if it's that same instance as March, we would actually expect the price to start shooting up pretty violently, which again, could be that Wednesday news. So I am prepared to close my short, I would think by Tuesday afternoon, potentially, in anticipation of whatever. I have no idea what they're going to talk about at that meeting, but if they were going to pull a fast one, and if it is similar to the last time this happened on the chart, that is what we would be anticipating, is again, an initial breakdown that does end up pulling the price higher. So even while the daily SMA is breaking below the bottom band, that would be predicated upon us continuing to rise higher, which importantly for us is going to be, like I said, 63.5 is very, very important. And then that would mount a move towards 63.8 and 64K potentially. The only thing though, for me, that it's going to allow us to move towards 73 is them like really whatever they say in that meeting is going to really make it seem like the Democrats are getting what they want for the ethics part of the bill, and therefore are more willing to vote on it. Unless we see some confirmation of that, I see no reason why that is bullish. So we've got those three most important targets. What are some of our other clues? I would say our most obvious one on the chart is just going to be the weekly SMA itself. So the weekly SMA itself is currently sitting at about 69K. What did I say earlier, guys? What happens when we interact with the weekly SMA during a bear market year? We get rejected off of it. So even if we do trend in that direction, typically speaking, what happens is it spends no more than about 2 weeks. This is the second longest time period in the history of the chart that we have spent above it. This is not common. So I think that's going to put pressure for a rejection ahead of an interaction with it personally, because we already spent so much time above it and could not sustain it. This is when we had a lot more hope and faith about the Clarity Act at that time. You know, people have basically priced in that they don't think it's going to happen this year, and that's not contingent with bullishness. So I'm going off of 73 because I see other people talking about it, and because it is technically what I said for all of June and July. So I can acknowledge that maybe I was just very early on that trend, and I am prepared to change my trade if necessary. But me personally, I think we're going to retest 62.5 at least one more time, just based on the structure of that weekly candle. Like that's not a bullish candle, guys. There's nothing bullish about that candle. So the first thing that the price is going to want to do at 5 p.m. PST today is test back towards the point of control and test back 64. But that doesn't mean that it's going to break them. That's just the first thing that it's going to want to do. It's going to want to check to make sure that those signals are actually bearish, and then it is free to continue dropping, which again may only be till Wednesday, and then they may say something in that news meeting that completely flips the price. So what are our other key targets? Actually, I haven't talked about this in a while. So this is the key range that we've been stuck in since the end of January, 76.3K to 64K. You will not hear this level talked about anywhere else, but for me, about 70.3K is the rough midpoint of that range that we've been stuck in. And how I think about it is when the price is below that, it puts pressure towards a 64K retest. When the price is above that, it puts pressure towards a 76.3K retest. So again, that is just above this weekly SMA. So it would be an important point for us to pay attention to. If the price can rally above the weekly SMA, how long is it able to stay above that 70.3K level? Because if it cannot, if we have a weekly close that's right around it, the next week is probably going to test lower. And then if we have that much upside, it's hard for me to believe that the price is just going to consolidate there magically. That would really, again, be predicated upon the Clarity Act passing, which is 360 days before the banks would actually have to implement whatever the law says, and therefore the money could fully flow. 360 days after that, not maybe 365, whatever, not from the actual point of the vote. So like the market may price it in early, but logic and reason does not actually follow that necessarily. It would just be people trying to beat out the move. So those are our first two important ones that the chart shows us, is specifically, again, the weekly SMA and that 70.3K level. Above that, I would say 73.8K. I've seen people toss around 76 to, or 73 to 76. I think that's the same circumstances when I called out the April-May peak, when I called that out in February. It's this one, sorry. I called that out way ahead of time, and I was saying 83 to 86. I was leaning towards 83 as we got closer to it, but my earliest call out of that level, I did say 83 to 86. So in some respects, I can understand why people would say 73 to 76. I just personally, I don't think that we're going to tag 76 again. It's very unlikely to me. That would be our last target up there, but 73.8K is our peak of the ETF buyers. So again, our largest cohort of individuals, I don't think I ever finished that thought way earlier, by the way. Our third cohort is just people now. It's you and me, baby. Like, it's people having to make decisions now. That's our third cohort of individuals. And if a lot of those people are newer, it's more likely that they're going to have to experience pain than to suddenly, oh no, you just started crypto and you magically bought the bottom. Congratulations, you know. That's rare. That's very rare, guys. So what is more likely is that anyone who's buying now is going to get a stark reminder that Bitcoin is highly volatile again in Q4 of this year. Some of them will sell and make rich people richer. Some of them will buy more and will become rich themselves. Make sure you are on the correct end of that. So broadly speaking, what I'm paying attention to for the weekly close, guys, is again that 63.5K level. Let's go look at the lower time frames real quick. Again, on the 4-hour time frame, I will continue to cover this in the membership more. I pretty much already said what I needed to say though, that there is a scalp opportunity on the way to 63.5. I don't personally think though, if we show weakness at 63.5, I don't really see a reason why the price is going to trend higher yet until that Wednesday news. The Wednesday news is like the earliest that there can be an irrational reason for the price to trend higher, but structurally speaking, this is a downtrend, period. So we are seeing compression on the 4-hour Bollinger Bands. However, typically speaking, we would either expect it to continue breaking to the upside, which again, we won't really get until Wednesday. That's a lot of 4-hour candles between now and Wednesday, guys. Or it tags one and heads right back in the opposite direction, which again, for me, would just be another retest of 62 to 62.5. At which point, I guess I would probably close my short. Just to be safe, just to like actually cap out profits. At this point, I was really early on this one, guys. My cost basis, I think, is like 64.5. After chopping around with it a little bit, I was very early on this one. So there definitely has been multiple opportunities to scalp in and out of this trade. I'm at the moment in my strategy. So I go over this more in my second book. You can get both books on the website, bitcoinescapeplan.com. That's all that I'm focused on right now, guys, is my second book. My second book is how you can leverage your credit to buy way more Bitcoin. And for me personally, this is going to be the first cycle where I'm actually using it specifically for trading capital instead of explicitly just buying spot Bitcoin. So all I really care about is maximizing my credit profile right now in advance of that October or November window so that I can borrow like a crazy person at the bottom and really be able to maximize that long to the upside with as much cash as possible. So I'm kind of playing it safe with my swings at the moment. That's where I'm amassing the bulk of my capital, because when I have that extra capital by leveraging my credit at the end of the year, then I'll be in a position to have not only a lot more margin cash. This I think is the interesting part. This is not in the book. I haven't really talked about this publicly yet. I'm still kind of refining this for a future product, but functionally speaking, it's almost safer in my strategy than it was with the spot Bitcoin. When I first discovered that strategy, I didn't know it was going to work. You know, it was at the end of 2020 into the first couple of months of 2021. I had no clue what I was doing and whether or not it would work. And it did. Like I say in the book, I turned $11,000 into $70,000 in 6 months for only $233 worth of interest, which is still the coolest thing I've ever done financially. But I was able to do that mostly off of just anticipating the broad moves of the chart. And that's what I'm hoping to do this time, but it'll be probably a lot more money this time, guys, in an equivalent amount of time. It really depends on if we see the 2019 fractal play out the same way in 2027 as it did in 2019. So broadly speaking, what am I focused on? I'm focused on just not getting shaken out of whatever the actual trend trade is. So for me, that's a short at the moment. If something happens on Wednesday that invalidates that short, I will have to accept, okay, now maybe we're going to trend bullish into that September 15th news, which is consistent with, again, our high in the 2018 cycle was September 4th. So I was already anticipating that. You know, I've talked many times on this channel that I was anticipating a move towards 64K getting rejected at that time. It is possible with the excitement around the bill passing or not passing that it could trend a little bit higher. But again, we would have to acknowledge that July is a consolidation month, not a bullish month then. And I don't know that the chart tells us that. The chart tells us that we got rejected off the point of control twice at that time. So for me, that is a high being set, and it's just lower than we thought it was going to be. So I'm not that sold on 73K. 73K would be purely predicated upon them pumping as much hopium as possible that we're going to pass on September 15th, in which case it would start shooting the price higher. I don't know that that is going to be the outcome. I'm not convinced that that's going to be the outcome. And people with a lot more money and intelligence on political stuff are betting as if that's not going to be the outcome. So it is hard for me to believe that's going to be the case. So what am I looking at in the next 24 to 48 hours. Well, specifically, again, we're back above the 4-hour SMA. We don't really want to stay there at the moment. We got just under 2 hours left in this candle. So that does look like we're going to want to push lower, but then there's really only one more 4-hour candle for the daily close. So I would really want to pay attention to, I mean, that, at the moment, that's a rejection. That's a rejection of the upper band at the moment. It's possible, again, that it could mount a move that allows us to start stair-stepping through it. But typically speaking, what we see when we have an interaction with that is it actually is going to go in the opposite direction now. So like this guy here, we have a tag that gets rejected, we start going in the opposite direction. That's during a period of compression. Where's another period of compression? Period of compression, right here. So we start trending towards the upper one. It's not able to sustain it. What's the next thing that the price does? It goes quite lower, still in that period of compression. Let's find another one. I guess this is kind of it. So same thing, a bit of compression as we're breaking to the upside, still ends up committing to the downside before heading higher. So you got to keep both your historical context as well as your short-term context in mind. The short-term context, according to the news, is at best uncertain, at worst is bearish. The short-term technicals, again, oh no, what did I do? Dear God. Oh, at least I did it towards the end of the video, guys. I zoomed in too far. The short-term technicals are also telling us, there we go, I fixed it. Dear God, that stresses me out so much every time I do that. The short-term technicals are telling us again that if we close below 63.5, that's going to pull the price down lower. There's nothing that's going to prevent the price from continuing to trend lower until some positive news on Wednesday. Technically speaking, can they come out earlier than that and say something? Yeah. Are they going to? I don't think so. I think that they're going to let the price drop again towards 62.5K. At which point, again, I will probably have to decide if I'm going to close the trade or not, because there's already an argument for closing the trade at that last one. It just really depends on if you want to be playing more scalps or swings at the moment. And there's an argument for both. I prefer swings personally, but when I have way more capital at the end of the year, I will be doing both more aggressively than I am now. I'll just be using, like, say you've got $10,000 that you can use as trading capital. This would mean that you have $30,000 total in the margin account, according to my strategy. Again, you can use the, go watch the video at the end of this video to get more details on that. But of that $10,000 that you're allowed to trade with, I would still put $8,000 towards whatever the swing trade is and just scalp with $2,000 worth, rather than, you know, having to commit the bulk of my trading to 15-minute swings. Is exhausting. It's really great, guys, to be up 480% this year on like 6 trades. You know, like I really am basically in 1 or 2 trades a month where I do all of this work up front to understand the trend so that I don't have to do anything. It's awesome. I love it. If you have any questions, comments, concerns, I don't know what I was about to say, leave them in the comments down below. Everything else you need is on the website. The membership, again, guys, the only place that you can really get that discounted membership trial is down below here in the YouTube description, as well as if you're an email subscriber. I think I am going to add it to Threads and Instagram pretty soon, but basically you've got to continue to consume my content in order to have access to that. If you just go to the website, it's going to be the full price. But that is where I go over. Outside of the videos, I will give updates as we're seeing key things happen, specifically on the 4-hour time frame, and that is how I place all my trades. That's how I make all my decisions. With the swing trades, you don't have to be quite as picky. You know, it doesn't really matter if your cost basis is important or if it's perfect. In my experience with it, I still have made a lot of money off of just paying attention to the overall trend. But with the scalps, that's the only place that you can get access to my thoughts on that, really. Like, I can say these levels to you in a YouTube video, but it's not useful to you 8 hours later. When it's useful to you is for me to say it. Again, I said that this morning, right before we had the 4-hour SMA retest, and that would be useful to you if you are someone who is looking for a scalp trade. So everything you need is in the membership or on the website at bitcoinescapeplan.com. Stay tuned for the newsletter tomorrow. And again, pay attention for that weekly close, daily close today. How close is it to 63.5K? If it is below that, that is bearish, my friends. I'll talk to you tomorrow.